Hello students, welcome to Legacy IAS Academy. In today's video, we are going to discuss about the possibility of a repo rate cut that experts and analysts are arguing that it is possible in the next meeting of the Monetary Policy Committee under the Reserve Bank of India. So what is Monetary Policy Committee? What is repo rate? How the cut will influence the economy? Let us try to understand this in more detail. Now for almost 2 years, RBI has kept the repo rate unchanged at 6.5%. However, now there is a glimmer of hope among the market enthusiasts that now the 6-member MPC, Monetary Policy Committee, that is working under the RBI is likely to cut the repo rate in the next meeting that is scheduled between February 5 to February 7. Now the cut is argued that if indeed RBI goes ahead with the cut, it can be to the tune of 0.25%, that is equivalent to 25 basis point. And if indeed RBI goes ahead with the cut, it is also important because it is in the last 5 years for the first time such rate cut we will be seeing from the RBI side. Analysts, however, some of the analysts counter argue and they believe that RBI will keep the monetary policy stance neutral. Now try to understand about the repo rate term itself. Now repo rate, that is also referred as repurchasing option, or simple terms we can explain it as the interest rate at which the banks borrow money from the central bank. Central bank in the case of India is the Reserve Bank of India. So for example, when you go to bank and you take a personal loan, you have to pay a certain rate of interest to the bank on the principal that you have borrowed. Similarly, when the commercial banks take loan from the RBI, they have to pay an interest rate on this borrowed money. So this interest rate is what we refer as the repo rate. So in the case of India, RBI is the central bank and the repo rate, its value, whether it's increase or decrease, is largely also associated with the rate of inflation. So to regulate inflation, RBI uses the instrument that is the repo rate. Now we have discussed the Monetary Policy Committee under the RBI is largely responsible for fixing, determining or altering this changing the repo rate. So the major objective of MPC is to fix the benchmark interest rate of the RBI. Monetary Policy Committee is made up of 6 members. Within the 6 members, 3 members are from the RBI, which includes the governor of the RBI, as well as 3 members are appointed by the central government. So these are the members that determine the repo rate. So if you briefly try to understand how does the repo rate mechanism works. Now suppose that we have a commercial bank and they need short-term funds that they want to give to the borrowers. So in this case, commercial banks may ask fund from the central bank. In our case, it can be the Reserve Bank of India. Now, once the commercial bank asks fund from the central bank, then central bank charges an interest rate on the funds given to the commercial bank. This interest rate, as we have discussed before also, is what we refer as the repo rate. Now, commercial banks pay an agreed upon repo rate on the funds that they receive from the Reserve Bank of India. This amount then is adjusted in the loans given to the customer. In simple terms, basically the commercial bank is borrowing money from RBI and then lending to its customer, and then it is charging the interest rate. So obviously on what factor its interest rate will depend upon? The repo rate. Higher the repo rate, higher interest banks will charge to its customer. Lower the repo rate, it has the possibility, the bank has possibility to charge a lower interest rate from the borrower. So in that way we can say higher the repo rate, higher will be the cost of borrowing for the general public of India, and lower repo rate means lower interest rate. So obviously when you are more likely to take loan from the bank, either for personal purposes, for the consumption purposes, expenditure purposes, or even let us suppose for any business or industrial activities, obviously the most favorable situation for you or as general consumer is lower repo rate. So when the repo rate becomes lower, it is expected that the demand in economy will increase because more people can borrow in an easier manner by paying lower interest rate, and thus they can invest the money, they can use this money for buying certain stuff. So that will drive the consumption, that will drive the demand, that will drive the overall production capacity of the industry and the economy. So that is how repo rate can also be linked to the growth rate of economy and overall the health of the economy. On the other hand, suppose that if repo rate is very low, in that case the amount of money borrowers can borrow can be very high. So there will be more amount of money that will enter into the market. So higher the amount of money circulating in the market, higher will be the rate of inflation. So that is why I told in the beginning that inflation is also being controlled by RBI by varying the repo rate. So higher the repo rate, lower is the possibility of the inflation rate, or lower will be the rate of inflation. Now, what is the expectation from the RBI in this context? Majority of economists have penciled in a 25 basis point reduction in the repo rate. Now, as I told you before, the current repo rate is at a 6.5%. So 25 basis point of reduction means that repo rate can be brought down to 6.25%, because 1 basis point is 1/100th of a percentage point. So 100 BPS makes 1%. This would be the first monetary policy announcement. Also, it's significant because we know that recently new governor of RBI has been appointed by the government, that is Sanjay Malhotra. So he is going to be the he is going to hold the meeting of monetary policy committee for the first time, and he is going to have the first monetary policy announcement. Now, why expectation is that RBI may reduce the repo rate? There are two reasons behind this. First reason is that from the budget itself we have seen that budget has done well to spur growth, that is boost consumption and expenditure in the economy. And second is expectations of inflation is also that it will come down in the near future from higher value that it has in the past. If we look at the trajectory of the repo rate in the last few years, from April 22, the repo rate was 4%. Then almost 6 times RBI has continuously increased repo rate. So from April 22, 4% to May 2023, 6.5%. And since May 2023, we can see that repo rate has remained constant. So the changes are going to take place after a long period of time. Now, before we were discussing that budget has given a hope that government is trying to spur economic growth by increasing consumption and demand in the economy. And one of the announcement that finance minister did in the union budget of 25-26 was a reduction in the overall personal income tax, because you know that individual who are earning up to 12 lakh rupees per year, they will not have to pay any income tax. Not only that, the tax slabs have also been enhanced from the 3 lakh of tax bracket earlier. Now the tax bracket has increased up to 4 lakh. So from 4 to 8 lakh you have to pay 5%, from 8 to 12 lakh you have to pay 10%, from 12 to 16 lakh you have to pay 20%, and so on, so on, so. So this revision in the personal income tax bracket and also the limit of the tax deducted at source has been increased as well. So all this indicates that the government is now focusing upon boosting of demand, which also requires the reduction in the repo rate so that the borrowing from the bank become easier because interest rate will be low. These measures will provide the much needed stimulus to the consumption demand. Also, if we talk about the retail inflation or the CPI, the consumer price inflation index that measures retail inflation, it has eased to a 4-month low of 5.22% in December from 5.48% in the previous month. So this also is the reason because there is no need or urgent need for RBI to control inflation, because inflation rate is already going down. So it is an opportune time for the RBI to reduce the repo rate. The cumulative rate cuts over the cycle would be at least 75 basis points. This is the future expectation. For now, in this particular announcement, there can be a cut of 25 basis point, and then by the time period between February to April 2025, further 50 basis point cut we can expect from the Reserve Bank of India. Now, RBI has already announced liquidity enhancement measures that have improved conditions in the market. For example, these are the enhancement measure, liquidity enhancement measure. Liquidity enhancement measures, in simple term we can understand, is increasing the circulation of money in the market. So these are considered as a prerequisite before cutting of repo rate. So this is another indication that RBI may be thinking in the same direction. Now, what are these three liquidity enhancement measures? The first is a $5 billion forex swap that RBI has carried out. This is largely to lower the interest rate at which the borrowing happens between two parties. Second is rupees 60,000 crore of open market operation. That is something that has been carried out with the RBI. And third, rupees 50,000 crore worth of 56-day variable day repo rate to improve liquidity in the banking system. So all these measures basically point to the same fact that there is going to be a repo rate reduction. Not only that, this also is a very significant announcement because it is coming amidst a global trade war that might have started or will be started in the near future due to the coming of Donald Trump as the 47th president of the United States. So we know that after taking the charge of US presidency, Donald Trump has announced tariff on many countries. He has even threatened tariff on India as well. But fortunately till now, he has not announced officially any kind of tariff or extra additional tariff on the Indian export. But countries such as Canada, Mexico and China were the first victim of his sword. However, currently Canada and Mexico additional tariff imposed on these countries have been postponed for a month because both countries have agreed to fulfill the demand of Donald Trump, that was to secure the American border, and that is why both countries have agreed to spend a huge amount of money to ensure that the transportation or movement of drugs in the US territory or movement of illegal migrants in the US territory does not happen either from Canada or from Mexico. Now, a fear of global trade war that obviously began resulted in the rise of the dollar against major currencies on one day, and this is the reason why rupee has plunged below the 87 level to an all-time low of 87.29 per dollar on Monday. So rupee is continuously weakening. However, this is good for the export of India, but again, if tariff is imposed on Indian exports, again the price of Indian goods in the American market will increase. Now let us try to understand that what happens to the lending rate if the repo rate is cut. Now obviously, if RBI reduces the repo rate to 6.25% from the current 6.5%, all external benchmark lending rates EBLR linked to the repo rate will come down by 25 bps, giving relief to the borrowers as the equated monthly installment EMIs will fall. That means when you take a loan, generally the rate that is used is a floating rate, which is linked with the external benchmark lending rate, that is the repo rate. So if repo rate goes up, what will happen? The interest that you have to pay on your loans, whether it is the house loan, whether it is a car loan, whether it is a personal loan, that will also go up. But at the same time, if repo rate comes down, what will happen? The interest will have to pay will be also going down. That means the overall value of EMIs that you pay to the banks will reduce. So this will be a significant boost to the consumption, because the extra money that the people will be able to save, they will spend it for buying various different commodities, goods and services. Second, lenders may also reduce interest rate on loans that are linked to the marginal cost of fund based lending rate. MCLR is the term that is used, and MCLR is calculated on the basis of internal cost of the banking institution, and also this is the rate, a fixed rate below which a bank is not allowed to lend to the consumer, because that will stress the overall balance sheet of the bank. So due to the reduction repo rate, we can see reduction in the MCLR based lending rate, where the full transmission of 250 bps hike in the repo rate between 2022 May and February 2023 has not happened as of now. Now obviously we have talked about that repo rate is directly related to the consumption and demand in the economy, that is related to the GDP growth rate. So there is some changes that we might expect in the future in the context of forecast on the growth. For example, you talk about the National Statistics Office of the Government of India. It had projected a 6.4% of growth for the Indian economy in this particular year. So that might change, that might increase because of the cut. Now, it would be interesting to see if RBI would provide a forecast for growth in FY26. However, if RBI, whenever it generally provides a forecast for any financial year, it does so in the month of April. So we might have to wait few more months to understand what is RBI's overall viewpoint on this. Apart from that, in the December 2024 monetary policy announcement, RBI had slashed the expected GDP growth rate for this particular year to 6.6% from the earlier projection of 7.2%. So with the repo rate cut, we might again see an upward shift in this particular expected figure of the India's GDP growth. So that is all about this particular video. I hope you got the idea about what is repo rate, who decides the repo rate, and how any change in this rate affect the overall economic parameters or macroeconomic fundamentals of a country. So if you like the video, please hit the like button, share it with your fellow aspirants, as well as subscribe to our channel for more such content. Thank you very much.